Right, morning traders. Welcome back to Morning Cuppa. Aiman here. Right, so looking at the S&P 500, well, it closed strong yesterday session, up by almost 0.6%, hitting fresh highs again. So the rally was led by tech and also I think on names, right, boosted by sentiment that rate cuts may come. So I think despite the US shutdown, markets stay focused on the earnings and also the policy outlook rather than the headline risk. So if you take a look at the charts right here, so the index is eyeing for the 6,800 level for now after break past the 6,700 level. Also, yeah, if you uh, see that the SSO ETF looks attractive for now, and if you believe that the S&P 500 to notch higher, I think worth to look. Right, so move on to our US trading stocks, right? Look stocks here. We publish ARM. So the stock is on a breakout formation, breaching above the 155 level. And we can expect that the stock to travel towards 170 level on a strong momentum, followed by the next resistance is at $185 level. So now, if the counter reverse, do watch out for 140 level for the immediate support. Also, we have AA, Alcoa Corp. So looking at charts here, the counter is on its high market structure, experiencing a follow-through momentum, jumping higher above this $35 level and eyeing for the immediate resistance at $38 level. If the stock climb up higher, we could say that it might travel towards the $41 level. Now, if the index slides lower below this $31 level, this might signals a shift to a bearish structure. Right, so looking at the China A50, well, it pulled back slightly on Wednesday session, moving in, I would say, moving in sideways and some profit taking after these recent runs, right? So yield in China appear to be softening, right? Also, the recent index rebalancing may still be adding some resistance to it, right? So uh, this looks more like a pause rather than a reversal. So I think it's a good time to catch the ETF 2823, potentially giving almost around 8% right here in return, right? Moving on to the WTI crude crude oil futures, right? Well, it rallied during the yesterday session, gaining traction as OPEC Plus surprised market with more output increase, easing oversupply fears. Well, reports for lower inventories at some region also added I would say physical supply premium. So that said, upside may stall unless demand holds or further supply cuts emerge. So we hold our long position unchanged, targeting for the $65 level, right? So coming back to the local market, looking at the ALI, well, it slipped at close yesterday, likely reflecting profit taking after these recent gains, spillover weakness from the regional market, and also some rotation away from the key sectors that has had led. Right, so at this juncture, it feels more like a pullback rather than a burst, right? Also, the market are likely to trade sideways ahead of Malaysian budget, which to be tabled this Friday. Technical wise, if you see charts here, uh, I think it is well within our expectation where it pulled back towards where we expected, right? At the Fibonacci golden ratio. So we still keep our positive trading bias at this point with resistance set at 1675, also 1007, where support is at 1570 points, right? So in terms of day-to-day basis, right, we saw energy to be a top gainer, followed by plantation sector, adding by almost 1.5% and also 0.5% respectively. So yeah, this is our watch list, and it is still valid. Right, so okay, today I have one special stocks that probably could attract your attention. So we have CTOS Digital here. Well, if you remember recently, I shared that CTOS potentially completed the pullback cycle after rebound from the 50% or the golden Fibonacci zone, right? So yeah, I think as of yesterday or recently, we can see that they counterprinted a bullish engulfing pattern, candlestick pattern, which we think that the bullish trajectory to remains, right? So you can target the resistance at 99 cent, followed by 1 ringgit and 2 cent, and do watch out for the 91 and a half cent level for CTOS, right? So moving on to our Malaysian trading stocks. So today we have SOP, Sarawak Oil Palm. So the stock is in its pending breakout formation at 3 ringgit and 35 cent. So with that, we expect that the momentum to remain steady and strong, and the stock able to climb higher to test the next resistance at 3 ringgit and 45 cent, followed by 3 ringgit and 55 cent level. So if the stock to reverse and pull back and clear the support uh, at the 3 ringgit 25 cent level, this signals a further pullback could happen. Right. So next we have GDP Holdings. So the stock on yesterday has experienced a breakout formation where it breached the resistance of uh, 46 cent, 46 cent level on a high volume, right? So if the bullish momentum persists, and continue to trend higher at upcoming session, the counter might climb higher towards the next resistance at 49 cent, and second resistance is back at 51 cent level. So do watch out for the 44 cent support for any attempt of reversal. Right. So looking at the FCPO, well, it inched higher at close on the Wednesday session, where the rally, I think, was supported by the expectation or anticipation that production will slow in the near term while export pick up, right? So Malaysia inventory have climbed, but the market expect them to ease as the year progress. So I think MPOB data is due this Friday. Traders are likely positioned ahead of potentially bullish supply and demand numbers, right? So at this juncture, after yesterday's breach above the 4,500 level, we adjust our resistance to 4,006 and also 4,007. So on the downside, support is at 4,350, followed by 4,250. Right, so that's all I have for today, and pass the floor to the next presenter. Thanks and happy trading.
Yes, hi, good morning. Today we have a thematic report, which is talking about women on boards, and how that will unlock firm value. So we've done a study and looked through all the board representation of the companies that we cover in Malaysia, in Singapore, in Indonesia, and even in Thailand. And we've also looked through many studies done by McKinsey, by Harvard, and by many authors to discover that corporations with a greater representation of women on boards generally consistently exhibit stronger governance, more effective decision making, and also higher firm value. And so this would mean that it will also translate to having a financial advantage and also better valuations for companies as a whole. So after we screened all the companies under our coverage in Malaysia, Indonesia, and Singapore, we compared the changes in the board gender composition over the last 3 years. We noticed that Malaysia is in the lead with women holding about 32% of board seats, where it held about 29.2% in FY 2022. Singapore is in the second place at 25%, and Indonesia lags behind. After looking at this data, we also evaluated increases in women's board representation and also each company's E-score relative to its sector median. The reason why we use the E-score and not the G-score is because the E-score generally makes up 50% of our ESG scoring, and we believe that with more women on board, that there will have some influence also on the general company's ESG direction, and therefore the ESG score as a whole would also increase. So basically, it also aligns with our findings from the S&P 500, which shows that a 10% rise in the number of women directors correlates to a 17.5% improvement in the MSCI E ratings. So because of that heavier weighting of E in our ESG framework, we believe that companies with strong diversity but low E scores may offer untapped upside. So basically, we have identified in the report, you will see that we've identified our top regional ideas, which are mostly large cap, mostly buy-rated names, where we noticed that the board diversity strength or the board diversity with women on board has actually improved over time, but the ESG score has not moved as much, which means that there is a clear upside there with the ESG-driven re-rating potential. So while these companies stand out for their near-term upside, we still believe that all will remain well-positioned for long-term ESG valuation gains. So we'll let you read the report for yourself. Basically, the top picks, just let me go through the Malaysian ones. We have Aeon Co, we have Axiata Group, and also VS Industries and IOI Properties as our, and one more, MPI as our top picks on the Malaysian side of things, and coming from strong board representation, strong women in board representation, and a potential for upside given the slower movement on the ESG score at this point. So let me stop here and pass you on to the next speaker, Meng Horng. Thank you.
Thank you, Leng. So we have an IPO note on THMY Holdings. Now, THMY Holdings is an ATE company. They designed and manufactures in-circuit tests, as well as a functional circuit test fixtures and platform, including the embedded software used to verify the PCB board as far as the performance. Now, the system measure and analyze various parameters from currents to capacitance for ICT, as well as to validate the functionalities of power supplies, display, input and output, as well as logic functions. Its clientele comprises of global EMS players as well as OEM players in the communication, networking, semiconductors, industrial electronics, and healthcare sectors. Now, in terms of the growth, avenue for them, there are two main one. I think the first one is on the tax requirements on PCP level, as well as the tax complexity, increases, with more logic, applications, as well as the larger form of PCB today. Think of your AI adoptions as well as data center expansions that require more of these high level and testing requirement. Now, in terms of the IPO, I think they are looking to raise 44.6 million, mainly to fund its factory expansions in Batu Kawan of a new facility of 88,000 square feet, which essentially double, its current manufacturing space that they have. These will, house 20 additional functional test assembly workstations, CNC precision machinery, as well as some AI-aided test platforms. Now, they also intended to expand their regional office in Thailand to strengthen its regional services and close proximity to their client. Now, in terms of the forecast, we forecast a 3 years earnings CAGR of 20.5% from FY25 March to FY28 March. These are mainly driven by new OEM customer wins, as well as the rising functional test demand in tandem with the more complex tax requirement, as well as ASIC proliferations with growing demand from AI adoptions. Now, the company is led by experienced founders with over 2 decades of industry experience. They have built multi-year relationship with some of the tier 1 global EMS, as well as fabless clients, providing a technological roadmap visibility, as well as a competitive positions. Now, we ascribe a 23 times PE multiple on the stocks to derive a fair value of 43 cents. The valuation multiple is at a discount to both the KL Tech as well as the ATE peers. These are mainly reflecting the smaller market caps as well as liquidity. However, is balanced by its higher margin profile, as well as a superior ROE of close to 20%. That would be all from us. I think, this IPO, we ascribe a fair value of 43 cents, and that's all from us today. And we should see you again tomorrow.